What is up, everyone? We can basically call this a crypto altcoin ETF alert video because right now there are 155 crypto ETP filings across 35 different digital assets, and that number is still climbing. Eric Balchunas is out here saying we could see 100 plus new crypto ETFs hit the market in the next 6 months, going right into 2026, everybody. He said we now count 155 crypto ETP filings across 35 assets. What you're watching right now is the largest institutional on-ramp in crypto history. Bitcoin blazed the trail, Ethereum followed, but now the altcoins have officially arrived. In this video, I'm going to walk you through the altcoin ETF landscape right now: XRP, Solana, Cardano, Sui, Chainlink, Dogecoin, Avalanche, Polkadot, Litecoin, Hedera, plus the basket products that we see. We're talking inflows, outflows, supply shocks, staking yields, leverage plays, and what it all means from a macro cycle perspective. And if you're new here, definitely subscribe and turn notifications on, because over the coming weeks, I'm going to be doing single asset deep dives on all of these: XRP, Solana, Cardano, Sui, Link, and the list goes on, breaking down the ETF flows and how I'm thinking about each one from a macro risk standpoint. So this is your altcoin ETF playbook for December 2025, stepping into 2026. So let's jump into this. Before we zoom in on specific coins, we have to set the macro backdrop, because none of this happens without regulatory shifts that have been happening. And we've seen them this year. Paul Atkins was confirmed as SEC chair on April 9th, 2025 in a 52-44 Senate vote, and sworn in April 21st. It is a brand new era for crypto. On November 12th, he rolls out Project Crypto and drops the line: most crypto tokens trading today are not themselves securities. It is so important that we understand those words. That's the line Wall Street has been waiting years for. And if you're a crypto holder like me, let's face it, we've all been waiting this entire time through cycles for this moment. Layer on to this, the US government shutdown that started October 1st. It impacted over 90 ETF applications, pushing what should have been an October approval wave into November and December. And then this, on December 2nd, 2025, Vanguard, $11 trillion asset under management, 50 million brokerage customers, finally caves and allows spot crypto ETFs on their platform: Bitcoin, Ethereum, XRP, Solana, and more. That's the macro setup. Atkins opens the door, the shutdown delays the wave, and Vanguard basically hangs a giant neon sign that says open for all of TradFi. So now let's talk about who's actually winning this first altcoin ETF wave and look at all of these assets. And real quick, every single asset that we're about to look at in this video, we already have a proprietary risk model for inside our platform, CCVI Intelligence. So if you're trying to build an actual macro investment plan around this ETF wave and the coming cycle, not just going off of just speculation, you can literally see where XRP, Solana, ADA, Sui, Link, and all of the rest sit on the risk curve and plan entries, scaling, and exits accordingly. We still have the free trial going on. We are going to be changing pricing in the coming weeks, so make sure you get back there, click the link below, and just lock in the current structure that we have played out right now. The risk models, if you're a macro investor, I think will be very helpful to you. If there's one asset that completely flipped the narrative this cycle, it's XRP. We now have 5 spot XRP ETFs live in the US with combined assets under management pushing towards $1 billion. And the flows have been relentless. XRP ETF inflows hit 15-day streak. US spot XRP ETFs have now logged 15 straight days of net inflows, pushing total assets to nearly 900 million. Could you imagine last cycle even seeing that headline? Institutions are buying. XRP ETFs smashed $586 million in flows. Milestone reached. US spot XRP ETFs have officially crossed $1 billion assets under management, with 473.5 million XRP now locked in regulated vaults. Bitwise's XRP ETF alone pulled $135 million in its first 3 days. Canary's XRPC came out of the gate with $58 million day one volume, the biggest of any ETF launch in 2025. And it's not just flows, it's distribution. Canary's XRP and HBAR ETFs are both available on Vanguard for TradFi investors. The firm's HBAR ETF has a market value of $66.4 million, while its XRP offering is at $351.2 million. So on the supply side, you've got one of the biggest supply shocks we've seen in years. Around 1.35 billion XRP have left exchanges over the last 60 days. Exchange reserves are at 5-year lows, with less than 3% of total supply sitting on exchanges, and ETF vaults now holding 473.5 million XRP. Price-wise, XRP has just been hanging around that $2 mark, and it's just structurally exactly what it looks like when an altcoin becomes an institutional instrument at this stage of a liquidity cycle. Solana 7% yield goes mainstream. 7 ETFs, $964 million assets under management. Solana is the proof of stake version of this story. It's exporting yields into Wall Street. We've got 7 US Solana ETFs trading with combined assets just under $1 billion. The big dog here is Bitwise's BSOL with 80% market share and about $631 million assets under management. They stake essentially all Solana holdings through Helios, targeting around 7% yield, and that yield flows back into ETF's NAV. Franklin Templeton just joined the party. Franklin Templeton has officially launched its Solana ETF on New York Stock Exchange ARCA under the ticker SOEZ, with the fund staking as much of its Solana as is practicable. We did see a reality check on December 4th. Solana ETFs recorded their largest ever single day outflow, around $32.19 million, driven mostly by 21 shares, TSOL, with $41.79 million in redemptions and negative cumulative flows. BSOL actually pulled in around $5.57 million that same day. So this is more about issuer-specific rebalancing than the Solana story breaking. On top of that, corporate treasuries are stacking Solana. Forward Industries holds about 6.9 million Solana after a $1.65 billion private placement led by Galaxy Digital, Jump Crypto, and Multicoin. Upexi holds over 2 million Solana, generating roughly $65,000 per day in staking revenue at 8% yields. Please understand how important this data is, how important what these products are doing is for the onboarding of Wall Street into crypto. So from a macro standpoint, Solana has become the way to go when it comes to yield-bearing crypto ETFs. Cardano right now could be the sleeping ETF giant. Cardano is the one that feels like it's just waiting to be switched on. Grayscale filed a standalone spot Cardano ETF, ticker GADA, but it's stuck in SEC S1 limbo. The October 1st shutdown left the SEC at roughly 9% staffing, and the October 26th deadline came and went with no ruling for Cardano. Cardano already has indirect ETF exposure through Grayscale's GDLC, which holds Bitcoin, ETH, XRP, Solana, and ADA. Here's Eric on X. Grayscale filed 19B4 for a spot Cardano ETF. First one in US and ballpark 60th crypto ETF filed this year so far. Cardano Foundation CEO Frederick Regard said clarity could come within about 30 days once the SEC is fully staffed again. And obviously, that alone is even taking a little bit longer. But meanwhile, whales have accumulated roughly 348 million ADA, over $200 million in early November. It's the strongest buying wave since May 2025. And Tuttle already filed for a 2x leverage ADA ETF back in January. So for Cardano, this looks like a win, not if scenario. So then we have SUI. First ETF is 2x leverage. SUI is the real risk-on ETF story in this wave. On December 4th, 21 shares launched TXXS on NASDAQ, the first ever SUI ETF, and it's 2x leveraged. The SEC has now approved the first ever 2x leveraged SUI ETF live on NASDAQ via 21 shares, a first for SUI in public markets. Here's Eric again on X. Missed this earlier, 21 shares launched a 2x SUI ETF, first SUI ETF. Rare, first one is leveraged, happened with the XRP too. They're starting to add up now. This is the 74th crypto ETF launched this year and 128th overall. Fee is about 1.89%, classic leveraged structure. On the spot side, Grayscale just filed to launch spot SUI ETF. The headlines were really picking up. Canary was actually first to file back in March 2025. Then we have Chainlink, $41 million day one inflows. So on the other side, Chainlink is showing how far out the risk curve institutions are willing to go when the infrastructure is there. On December 2nd, Grayscale launched GLNK, the first US spot Chainlink ETF on New York Stock Exchange ARCA. Day one, about 37 million to 41.5 million in inflows and 13 million in trading volume, with assets at $67.55 million by December 3rd. The new Grayscale spot Chainlink ETF did really solid volume on day one of 13 million. Also $41 million in first day flows. Another insta hit from the crypto world. So GLNK took in $42 million on day one. Not blockbuster success, but very good for a new launch. Chainlink showing that longer tail assets can find success in the ETF wrapper too. It doesn't currently pass staking rewards to investors. The trust does not meet the requirement to stake Link. Price-wise, Link popped around 7% on launch day on volume, 138% above average. From a macro view, SUI is the leveraged newcomer, and Link is the proof that infrastructure coins can attract serious ETF flows. Dogecoin is a reality check. 3 ETFs launched in late November. 21 shares, 2x TXXD, Grayscale's GDOG, Bitwise's BWOW, and combined first week inflows were only about $2.16 million. GDOG did 1.41 million in day one volume with 0 net inflows. Here's Eric again on X, the ETF Pro. GDOG first Doge ETF saw $1.4 million volume on day one. Solid for an average launch, but low for a first ever spot product. Not too surprising though, we actually made a rhyme a while ago predicting this. The further away you get from Bitcoin, the less asset there will be. Compare that with XRP ETFs hitting roughly $243 million day one inflows and $874 million in 13 days. That's roughly 159x difference. Meme energy does not equal institutional demand, at least not right now. Avalanche has 3 issuers racing to launch, with Bitwise's BAVA allowing up to 70% of AVAX staked at 0.34% fee and a 12% cut of staking yield as expenses. VanEck's VAVX and Grayscale's AVAX product are right behind, all broadly targeting Q1 2026. Avalanche also pushed the Granite upgrade live November 19th, bringing sub-second confirmations and 40% lower cross-chain gas costs. Polkadot's TDOT from 21 shares is already on DTCC with roughly 90% approval odds, and Grayscale's DOT ETF would allow up to 85% of holdings staked via Coinbase custody. Litecoin Canary's LTCC has about $7.67 million in inflows, but is now sitting on a run of 0 new money, even as the network hash rate hits all-time highs, up 117% year over year. Canary's HBAR is the only US spot HBAR ETF, sitting around 65 to 74 million asset under management, 29.9 million day one inflows, while Grayscale quietly withdrew its HBAR filing. All of that gives us a clear picture, which L1's TradFi is actually willing to buy once they step off the BTC ETH path. Now zooming out, basket ETFs are where a lot of conservative capital is going to hide. Canary's MRCA, the American-made crypto ETF, filed December 1st for CBOE, BZX with 8 holdings, each capped at 20%. BTC, Solana, XRP, Avalanche, HBAR, Link, LTC, XLM. No meme coins, no stable coins. Staking rewards included, quarterly rebalancing. Grayscale's GDLC tracks Bitcoin, Ethereum, XRP, Solana, ADA, and is already live as an ETF with hundreds of millions in assets under management. Bitwise's BitW sits around $1.4 billion assets under management with 10 holdings, including SUI and Link. On the flow side, you can literally see the rotation. December 5th, Bitcoin ETFs, 54.79 million. Ethereum ETFs, 75.21 million outflows. Solana ETFs, 15.68 million. XRP ETFs, 10.23 million. So here's a bigger picture. US spot Bitcoin ETF assets under management is around $120.68 billion, down from a $169.54 billion peak, with 30-day net outflows of $4.31 billion. Now, this could be expected later in the year as we step into 2026. Bitcoin cools off at the margin, and institutions start tiptoeing out the risk curve into things like XRP, Solana, and now Chainlink, once the ETF pipes exist. So here's what I'm watching next. December 2025, XRP ETFs pressing deeper above $1 billion asset under management. Bitwise's Chainlink decision window. Potential restart on Cardano's Grayscale process as the SEC digs out of the backlog going into Q1 2026. Avalanche ETF approvals. Bitwise, BAVA, VanEck, VAVX, Grayscale conversion. Polkadot ETF approvals. 21 shares, Grayscale, Rex Osprey. SUI spot ETF decisions heading into Canary's March 2026 deadline. Zoom all the way out. We've got 155 crypto ETP filings across 35 assets, with Bloomberg expecting 100 plus new launches in the next 6 months. We have an SEC chair literally saying most tokens aren't securities. We have Vanguard opening the floodgates to 50 million brokerage customers. And we have XRP showing that altcoin ETFs can approach $1 billion in weeks, with a 15-day inflow streak and nearly 500 million tokens locked away. At this point, the question isn't if institutions are coming to crypto. This is what we've been preparing for. The question is which assets they're lining up for and how you're positioned when that rotation gets aggressive. So if you found this breakdown helpful, please be sure to subscribe, hit that like button, turn notifications on, because I'm going to start doing deep dives on each of these cryptos, each of these assets. And if you're not in our intelligence system with our risk models for these assets, click the link below, get into our free trial, and try us out. I appreciate all of you watching. I'll see you in the next video. God bless.